I was not planning on making this video. Usually 2 videos in a 24-hour period is plenty, and by some of your standards, too much. But I think you need to see what Adam Aron just said. Adam Aron is doing his part in calling out the naked shorts, and we're going to do our part to spread this information. Now, with that being said, what does this mean? What's the ultimate outcome? What's the end goal to what Adam Aron is saying? And could anything possibly get changed here? So we will go ahead and start with this article from Investor Place. It says AMC stock alert. Adam Aron calls out fail to deliver shares. Shareholders believe that something sinister is occurring with AMC stock behind the scenes. Now, Adam Aron put out this tweet. He says, many of you are incensed by the high number of failed to deliver AMC shares, and that AMC again has been on the threshold securities list for multiple weeks. We repeatedly have gone to the New York Stock Exchange and FINRA and did so again in July to put and keep this entire situation on their radar. The concept of failure to deliver has been a central topic of meme stock investors this year. The scenario occurs when one party in a contract fails to deliver on their obligation, which could be shares, options, or futures. In AMC's case, the FTD situation likely relates to shares being shorted. If a short seller does not own all or any of the shares at the time of settlement, an FTD situation can occur. This is also known as naked short selling. In addition, FTDs can result in a creation of phantom shares, which have a dilutive nature and can lower the price of a stock. As Aron has pointed out, AMC has been included on the New York Stock Exchange threshold securities list for several weeks now. Inclusion on the list requires an aggregate FTD position for 5 consecutive days at a clearing agency, at least 10,000 FTD shares, and at least 0.5% of the issuer's shares outstanding. Based on data from Fintel, AMC has had a daily FTD position of over 10 million shares since June 27th, from May 3rd to June 26th. AMC's FTDs never exceeded 10 million shares. So this is record high FTDs. You've never seen this before in AMC. Now, some AMC shareholders believe that naked short selling is the major contributor to AMC's FTDs. At the same time, the Securities and Exchange Commission notes that not all naked short selling is done maliciously, although this is mainly applicable to illiquid and thinly traded securities. The SEC explains that naked short selling could occur if there is a sudden surge in buying interest in that security, or if few investors are selling the security at that time. AMC carries an average trading volume of 23 million shares, so it is definitely not in the thinly traded camp. On the bright side, AMC announced that the period from July 21st through July 27th was its best admissions revenue week since its inception 103 years ago. 65 of AMC's U.S. locations reported their highest ever box office weeks of all time, following the successful releases of Barbie and Oppenheimer. Now, let me give you a quick history lesson on naked short selling. Naked short selling has been around for centuries, but it gained steam and notoriety in the early 2000s following extreme losses incurred by droves of investors that sparked an investigation by the Securities and Exchange Commission. It was found by regulators to be highly detrimental to the securities because it allowed traders to artificially drive down prices for their own gain through false rumors or negative publicity. Turner said that concern was that this could lead to large losses for legitimate investors who held long positions due to an increased number of false sales. In 2010, the Dodd-Frank Wall Street Reform and Consumer Protection Act was enacted. This contained strict provisions meant to prevent naked short selling, including a ban on naked access, where brokers allow customers direct access without pre-approving each trade. So if these brokers kind of turn a blind eye because maybe they trust the firm that's looking to make the trade, or maybe know about it. Worst case scenario, they know what's going on and they just let it happen. Well, some of these individuals can do some pretty nasty things to a stock, and you've seen that happen with AMC. Now, quote, it also includes rules requiring investors to place orders through a clearing agency before executing transactions outside standard settlement times, as well as activities such as fail to deliver deadlines, public notification procedures, and rebate requirements on certain transactions. Naked short selling is technically illegal, but it still happens. Though the SEC made naked short selling illegal in 2008, instances of naked short selling have occurred in the U.S. since. One famous example happened fairly recently. I'm sure you guys know what this is. With GameStop shares. The most infamous recent example of naked short selling was the GameStop saga in 2021, where traders reportedly sold short around 140% of its shares, Turner said. This meant that 40% more shares were short than existed, which is only possible with phantom sales from naked short selling. What this means essentially is that naked short sellers deposited digital entitlements into buyers' accounts, which are like promises or IOUs to locate the actual shares and deliver them at some point, Turner explained. However, when the short squeeze picked up steam, the lack of available shares meant that many short sellers failed to deliver these borrowed shares. This led to a parabolic rise in the share price and many trades not getting settled. And it goes on to say that naked short selling continues via loopholes. Naked short selling continues today, albeit on a much smaller scale than it did prior to 2008. Though technically illegal, the practice is able to be executed through numerous loopholes, including zero-plus agreements. One way that traders have been able to circumvent laws and regulations around naked short selling is by entering into zero-plus agreements, which allow them to simultaneously enter into long and short trades. Turner said this means they can offset any potential loss from naked short selling while avoiding penalties from regulators. Another loophole traders can exploit is called payment for order flow. In this scenario, brokers receive payment for routing orders away from exchanges and into dark pools, allowing them to bypass certain rules or restrictions on their trades. Doesn't that sound like something we've seen recently? Let me read that again. Another loophole traders can exploit is called payment for order flow. In this scenario, brokers receive payment for routing orders away from exchanges and into dark pools, allowing them to bypass certain rules or restrictions on their trades. AMC dark pool trading. Let's see what's going on in the dark pools these days. Well, today's off-exchange and dark pool volume is 9.1 million shares, which is 58.65% of the total volume. Let's look at Apple dark pool trading numbers. If we can pull it up, I wouldn't be surprised if we couldn't, just because, let's see. Maybe we can. I guess that's still very high as well, 40.69%. That doesn't exactly sound right, although it's going to vary day by day and stock by stock. But AMC's numbers are abnormally high, right? Yeah, today's lit volume was 6.4 million, which is 41.35%. So you got a problem, right? So that's another avenue potential naked shorting can be taking place. Now, this can make it more difficult for regulators to detect cases of illegal naked shorting since trades are routed away from exchanges, thus making the transactions more difficult to trace. That obviously is what, I mean, you can infer that's what's been going on here. Yet another fast one traders can pull is to employ multiple entities offshore accounts that disguise their activities so as to not raise suspicion from regulatory agencies. For an example, Turner said, if an entity enters into a complex network of transactions or contracts spread out over several countries, investigators will likely have difficulty tracing back all the interlinked accounts involved in a single transaction. Naked short selling, when carried out, however, divisively, is a general negative occurrence that can upset and confuse the market. Naked short selling can lead to a vicious cycle in which short sellers drive down the stock price, triggering more short selling and further pushing down the price. This can cause panic among investors. And I think this pretty well puts it into context what's currently going on with AMC stock. If you look at AMC's FTDs today, I mean, this is pretty simple as well. We talked about this basically every single day. You're at the highest FTDs that you have seen, and as of today, which was August 2nd, you had about 12.7 million FTDs. Tomorrow, you're going to have around 12 million FTDs. After that, you ramp up to 13 million to 12.5 million, and then you hit the highest point next week on Monday, and that is 14.6 million FTDs. So this is definitely a big problem. Now, with the creation of phantom shares, that, as they already said, is very dilutive. That has a negative effect on the price of any given stock. Kind of like what we've seen recently with AMC. As AMC has been falling, you've seen this negative, kind of effect on the price of AMC. It's continued to fall. Now, you've seen a lot of what I believe to be naked shorting in AMC, but you've also seen a lot of legal shorting as well. There's both that's going on here. The short interest of free float is about 30%, which is the highest it's ever been. Considering the FTDs are at the highest they've ever been, shorts have the most to lose that they have ever had to lose in a trade in AMC ever. Meaning that if AMC does start to rally, you thought what you seen in January of 2021 was aggressive and, volatile. Well, this time around could be a lot bigger than that. Now, there's a lot of things that are different today than then. Obviously, interest rates are higher, things of that nature, if you want to get super technical about the macro environment. But I could also say AMC's business is in a much better place today. Now, take note of what happened today, or yesterday, depending if you're watching this video after midnight or not. But take note that AMC only fell 2.64% on Wednesday. The NASDAQ itself fell over 2%. So AMC did pretty much the same thing as the NASDAQ, which you're not going to expect to see on any given day with AMC. If the NASDAQ's down 2%, you would expect AMC to be down 5 to 10%. Not down pretty much equivalent to the NASDAQ. So there is something happening here that is a little bit more bullish than what we have seen in times past. Now, the option activity on the day today was pretty dang negative. It started to ramp and get even more negative throughout the day today and into the end of the day. You've seen about 39 orders totaling $17.21 million with a positive order value of 3%. So it definitely could be better here. But I think the bottom line is even Adam Aron's calling out the naked shorts. We got a problem at this point. So you got record high FTDs, record high legal short interest, record high put volume and activity in the options market. You've never seen this before. You've never seen the put to call ratio at these extreme levels. At the same time, it looks like retail is winning this trade. So we'll see what happens with the courts. But if the courts rule in our favor again, that could be very bullish, as we seen just a week or two ago. If the courts rule to let this go through and let AMC raise billions of dollars of capital, I see that as a positive as well, because you also crush the short thesis. If If it wasn't for this arbitrage trade, you wouldn't have this many potential naked shorts in the trade. They're looking at this as a hands down home run. Now, they don't understand that even if this arbitrage trade does work for them, just AMC raising billions of dollars of capital probably lets the stock rally, and it probably doesn't have this huge negative drawdown to AMC's share price as they expect. So we'll see what happens, but the data is the most bullish it's been for a potential short squeeze ever. So just remember that as we go through trading. And again, today was pretty bullish for AMC relative to what we have seen in the past. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.